In economic transaction number 4, we incurred a $200 FIDO expense. Again, we received it in January. We're going to be paying it later. So whenever we pay anything later, when we purchase an item, we create an accounts payable. The creation of an accounts payable is teaching us the accrual concept of accounting. So here we go. We're going to select our supplier, which is FIDO. The description, I'll just simply write telephone or cellular expense, and the amount that we incurred is $200. What this will happen is that, well, in this particular system, we need to write an invoice number or whatever. Here we go. Just write anything that we, I'll write here invoice number 3. Our report, the moment we process the entry, is debit telephone for $200, increase of an expense as a debit balance, and we credit the control account, accounts payable, for $200. The moment we process this transaction, as a matter of fact, I will not process it immediately. I would like to show you something. I'm going to disregard the transaction. Look what happens. If I go to my trial balance, my trial balance is in balance, as we notice right here. I would like to prepare my income statement. Let me prepare my income statement. I go to Financials, Income Statement. Only with an accounting software can you do this so quickly. If you notice, we had made sales of $12,000, and if I click on it, it's a credit balance. Well, when we prepare financial statements, we do not show the brackets. We know sales are credit balance. In this particular case, I have no expenses. Therefore, my total net income is $12,000. I would like to prove to you the moment that we make a purchase from FIDO, we incur the expense of telephone expense or cellular, whatever you're comfortable with. And the amount that we said was $200. Oops, $200. Here we go. This transaction, demonstrated again, will debit the telephone expense of $200 and credit accounts payable of $200. The moment I post this entry, look what will happen. Oh yes, it asked me for an invoice number. Here, I'll put an invoice number 12. The moment I process this entry, look what will happen. And it's been posted. I go to reports, I go to my financials, go to my trial balance. My trial balance will always be in balance. Eventually, you don't even need to look at that any longer. We have our expense here of $200. If I click on this, it will show me my general ledger, debit balance of $200. The whole idea of this simple exercise was to demonstrate that when I prepare my income statement, from January to December, always a period in time, always for a period from to. The expense of $200 decreases profit. So proof positive that whenever you incur an expense, it will reduce your profit. Simple concept to understand, but important to visually see this. And our net income of $11,800, this is a credit balance. Why? Because sales is a credit balance, which we do not show in brackets when we prepare financial statements. Debits are expenses, and $12,000 less $200 gives me $11,800 credit balance. And you'll note that later on, the net income of $11,800, which is a credit balance, will flow to retained earnings as a credit balance. And we will demonstrate this later on. We'd like to process one more transaction. There will always be the same. Supposedly, I incurred on January 31st, Hydro-Quebec. They sent me an electrical bill, which I haven't for January, which I have to pay later, and the total amount of the electrical bill happens to be $1,500. The entry for this, if I go to reports, all the time, debit electricity expense and credit accounts payable. The 2100 accounts payable account is a control account. This control account will always equal to my sub-ledger accounts payable account. And we'll demonstrate that in an instant. I will post this. And if I simply ask you what will be the effect of a $1,500 electricity bill, it will reduce your profit by $1,500. Let us go back. Let me post the entry. Okay, it's asking me for, here I put it, an invoice number. These are system controls. Let me go back to my report, financial statements. Look at my trial balance. It will always be in balance. With electronic accounting system, the trial balance is always in balance unless there's a major catastrophe. I go to reports again. I go to my income statement from the 1st of January to January 31st. Yes, you guessed it. The $1,500 electricity reduced the profit, and now our new net income is $10,300. Proof positive that expenses will reduce profit, which is pretty logical. Now, what do I mean by the control account? Let me go again to my trial balance. If we go to the trial balance, we'll look at our accounts payable. We have 1,700. Imagine you had 150 different suppliers. This total here, you need to verify it with the accounts payable subledger. So, click on reports, go to financials. Click on reports, go to payables, supplier aged, select all the suppliers at the end of the month of January 31st, and proof positive that the control account, which is accounts payable, will always equal to the supplier aged, or what I call subledger. And the subledger of 1,700 agrees to the control account on the balance sheet. Thank you.